Yeah, so we're telling them to bring their expectations down a little bit for 2026. They've had 2 years of really strong growth in the equity markets and in the fixed income markets, as you've talked about as well. But I think we're going to see that pull back a little bit. Now, we've had a little bit of consolidation in the markets already at the end of this year. I think as we go into next year, first quarter will be pretty strong. You've got a lot of stimulus coming in the first quarter of the year. But then I think that will start to fade. And the question is, can earnings survive? And if so, then I think you have a decent year. But if we start to struggle on those earnings, then I think we could see some struggles.
And on the earnings front, boy, second quarter, very good. Third quarter, really good. What is your earnings outlook for next year?
Yeah, look, third quarter, I mean, we were double expectations on EPS growth, right? And revenue growth close to 7%. Again, we look out and we go, but if the consumer is starting to slow, the consumer doesn't have to fall off a cliff, but if the consumer is slowing, and we saw real spending come out at being flat last week, then you're looking at less spending, you're looking at revenues coming down, you're looking at margin compressions. All of these things tells us that we should see earnings start to pull back a little bit next year.
I mean, we had tariffs. I'm going to say it's kind of been almost a non-event after you got after that initial shock. Haven't necessarily seen it in the numbers or in the economic data. I'm not sure.
And I wonder, Paul, if you just jinxed us, right? By saying that.
Very possible.
I do think we have the Supreme Court decision coming along on IEEPA, right? And that could bring some more volatility. But I think in the long run, there's not going to be an issue around refunds. And it's going to be more of how the administration puts them into play than if they do.
Your magic of saying, hey, you're scared, you got to participate in the markets. It's really been noted. This is Crossmark Global Investments. This is Victoria Fernandez, of course, and always Bob Dahl. Okay, great. But what's changed is the money market fund is not 4.x% anymore.
Correct.
What is the behavioral change in Crossmark clients from a 3.6% money market fund?
Yeah, I think clients before were okay letting cash sit around. They didn't feel that opportunity cost so much because they were earning higher rates in that money market. Now, however, we're saying, but look, you've just seen the 10-year go up 14 basis points, all right, on the treasuries. You're seeing a steepening of the yield curve. There's some opportunities because there's rotation, Tom, that we're seeing. It's not just healthcare and utilities and energy like we've talked about. We're seeing a rotation on the internals and transportation, global autos, global materials. You're even seeing it in some of the home builders. So if we're starting to see some opportunities there that the internal trends are shifting, there's where you want to go ahead and put some money to work.